Now going from building local partnerships to adapting products and services to local markets, which is the topic of our panel 4. If I could please welcome to the stage Simon Davies, Chair of the Financial Services Committee at the Brazilian Chamber of Commerce, and our panelists, Ms. Angela Stathi, European Innovation Council, and non-executive director at Digital Boost, as well as Chris Michael, co-founder and co-CEO of Ozone API, Mr. Luis Moraes, head of banking at Celcoin, and Mr. Mauricio Santos, specialist in financial services in Brazil and LATAM. Thank you very much. This panel is also supposed to take 45 minutes. Thank you very much.
I'll be ready. Good morning. And it's the end of an interesting and informative morning, but I can assure you that we still have a lot more information to divulge. I am Simon Davies, and my responsibility here is as the chair of the Financial Services Committee of the Brazilian Chamber. I do have some real-world experience, and I run a portfolio of businesses, and most of my working life has been spent either in Brazil or working with Brazilian businesses. And I'm particularly passionate about UK-Brazilian bilateral trade and business relationships. And I'd just like to emphasize the 200 years. We've had 200 years of diplomatic relations between Brazil and the UK. And I still think that there's a lot more that we can do in terms of bilateral and business relationships. So I'm a strong and passionate advocate of developing business and trade between our two countries. So that's enough from me. We have a very distinguished panel today, and I will briefly introduce them so that we can crack on and start asking questions and getting their experiences and their points of view, which is what it's all about. So our distinguished panel, they provide a good mix of British, Brazilian, and global experience in different aspects of operations, regulatory and tech systems, within the Fintech environment. So I am on my immediate left is Angela Stathi. She's the co-founder of Brazil Tech Connect. She's also a deep tech investment expert, and she's spent many years advising the European Commission and the European Innovation Council Fund. She's also a chair of Digital Boost. Next to her is Chris Michaels. Chris is British. He's based in Abu Dhabi, and he is a founder, a fintech founder. He's the founder and co-CEO of Ozone API. He led the development of the UK open banking standard. Next to him is Luis Moraes. Luis is the head of banking at Celcoin. They're a leading infratech company in Brazil that provides banking, credit, and payment solutions to more than 6,000 business customers. The thing I always love about Brazil is scale. It's so big. Banking as a service, that is Luis's specialty, and we'll be talking about that. And at the end of our panel is Mauricio dos Santos, again a Brazilian based in Sao Paulo. Mauricio is CEO of Claro Pay and Financial Services, and also an executive director of Claro Brazil. He has many years of experience in financial services, including several senior positions at Citibank. So, thank you very much. And I will sit down. On that basis, the first question I'm going to ask, and we're going to try and keep this really informative, we're going to try and keep it interactive as well. So the first question I'm going to ask is, when expanding into new countries, what are the most significant challenges that fintechs face when adapting their products and services? Would you like to kick off, Mauricio?
Yeah. So I have listed, thinking about this question, some of the aspects that needed to be taken into consideration when a fintech has the intention to get into a new market, especially in Brazil and UK, we are talking about today. So first of all, regulations, of course. You need to take into consideration the differences of regulations among the countries, and Brazil has very specific regulations. not only PIX that we talked here about instantaneous payments, open finance, but there are very specific regulations in terms of interest rates. For instance, Brazil is a very different country in terms of calculating interest rates. Compounded interest rates do not exist in the US or in any other developed country. It's different in Brazil, so it impacts technologies, impacts operations, the business. We talked in the prior panel about installments, payments in installments in credit cards that exist in Brazil for many years, and it's not common in other markets. So there are we call jabuticabas, things that are very specific to Brazil that needed to be taken into consideration. Another aspect is customer behavior. So culture differs country by country. Customers in Brazil, for instance, have been, as Diego said in the prior panel, a high level of digitization. It's different if compared to other Latin America countries. So you cannot say, Latin America is the same way the customer behaves. No, Mexico is much less digitized than Brazil. Everybody uses WhatsApp. Digital banking is very common in Brazil. We have about 6 or 8 digital accounts per person in Brazil, according to the latest statistics. So needs to be taken into consideration. Even for operations, if you are going to operate in the country, you needed to take into consideration time zone, language differences comparing to your headquarters. It's very important, it cannot be put aside. Marketing, so analyzing the competition, the market landscape, the market share, branding strategy. Strategic partnerships are very important, as we discussed in the prior panel. So with the banks, fintechs to accelerate the implementation. Integrations with the open banking, PIX, and several common infrastructure of the country are very important as well. Trust is essential, because if you do not have a brand that is going to be translated into trust, is something you need to think and perhaps work with partnerships to have a co-branded product to carry from your partner the brand to start in the country. We have seen several cases in Brazil of this kind of situation, companies without a brand, fintechs, new fintechs without brand that had established partnerships with the local companies with strong brands. And of course, items such as frauds or security are very important to be taken into consideration in terms of trust with the customers. And I think that we are going to discuss here is localization versus global scalability, right? I think every fintech that wants to expand operations in other countries will think about using economy of scale and the footprint they have in one country to leverage the operations, technology, and other aspects of the products in different countries. But there is a dilemma, there is a difficulty in this aspect, which is there are many things that are very specific, such as the ones that I listed here, country by country. How do you obtain economies of scale, cost efficiency, and at the same time be competitive in local markets with all the products designed specifically for the customer of that country, right? So I think these are the major aspects that needed to be thought about.
And as you say, Mauricio, we're going to drill down into them. And I think the first thing is to ask Angela, I'm going to put you on the spot and ask you, you started, Mauricio, with regulations. So Angela, how do different regulatory environments share product development?
So I'm going to say from my work that I do in the UK, but also mainly as well in Europe, I see regulation as an enabler as opposed to an obstacle for product innovation. That is very important. I used to develop products for one of my former employers, and I always find that when you read regulation, but also when you actually work with regulators, you actually end up creating products that are in line with regulation, but also speak the language of consumers. And when you said about regulation across nations, my work at the European Commission, you would think that it is one regulation. Yes, you could say that it is one region, but every single country in Europe has its interpretation. So when you have a Brazilian business willing to come to the UK, at least they have to deal with the UK Financial Services Regulator. But when it goes to Europe, imagine how big the trouble is, because not only they have to adhere to the regional regulation, but also the interpretation. And I will give just one example. I'm currently working with a Fintech from Estonia. Estonia is quite prominent in coming up with these very innovative businesses. They are looking to passport individuals' credit history, and we heard from the previous panel about the open API and about ability to transfer data very easily from one institution to the other. Well, this startup is trying to do that across nations, and actually to do that with very fragmented regulation. Imagine how difficult this is. So I would love to see regulators across regions be more collaborative. I think there is the path there, but it's great to see that the UK is very innovative and open to support startups.
Okay, an interesting one, as we heard from the FCA, in the fact that they are actually looking at moving away from PSD1 and PSD2, but that will give us some challenges. But to put that into perspective, Chris, could I ask you about open banking and how that has affected product and service development and how it will continue to affect those aspects?
Yeah, I think the reality is we're just seeing the start when it comes to the potential of open banking. The UK was the first market that introduced both regulations and standards for open banking at the same time. And it's taken quite a few years, and I think the implementation of open banking in the UK is kind of largely working because we did in the UK have a common standard that was reasonably well adopted. There was quite a lot of emphasis put around trust, around conformance and certification to make sure all providers had a consistent implementation of these APIs. And there was a lot of work put into supporting the ecosystem. As Marie said in the previous panel, I think Brazil's taken that further. There's been more emphasis around conformance and trust than the UK, and again, a large market with a common standard. What that does is that enables fintechs to enter the market and connect and operate across that market relatively easily, so they don't have to rebuild their integration with each bank, because each bank's got something slightly different. And what that means is that you can accelerate the pace of innovation. The challenge with both of those markets, I think, is that when we talk about open banking, and someone mentioned this previously, open banking is a horrible name, right? Open finance is horrible. Smart data is a better name, but still, these are trade names. These are not names that consumers should be frightened by or even aware of, in my opinion. What we're seeing in a few other markets, the UAE is an interesting market because they've taken this a stage further. They've built a brand for open banking that's designed to be a customer-facing brand that gives customers trust. It's called Al Tarek. So it's an Arab word, but it doesn't mention open or banking. And what it does is it enables all participants, whether you're a bank or a fintech, to have a consistency in terms of how you talk to customers. And it's talking to customers about, here's a way to connect your application to a bank that's secure, that's trusted, that's backed by the regulator. A trust mark, if you like. And that's something that's kind of been missing pretty much everywhere else in the world. There's a lot of other things around commercial models and liability models that are still quite opaque in most cases. But fundamentally, if you've got this trust with customers and you've got a sort of implementation in a market that's easy for fintechs to integrate, the sky's the limit. There's all sorts of services you can introduce, not just getting data, not just lending, which is one of the big use cases, but all sorts of other things around payments and payment innovation as well. And that was actually the primary objective of PSD2, was to offer an alternative to card payments. But that was never put into the regulation, it was never clear to participants, and so it didn't actually work across Europe.
Just adding a point, you said that it's easier for a fintech with open finance, open banking facilitates or not the entrance of new fintechs. But on the other side, in terms of competition, it helps a lot because in case of Brazil, we had 5 large banks with more than 90% of the market share in basically all the products, including credit, some years ago. And open finance is of course, is already helping fintechs to have the data from the customer, which belonged basically to the incumbent banks, now to offer different services. So it's better for competition and at the end, better for consumers to have more options and better options in terms of service.
I just want to make an interesting point there, which also picks up on a point that you mentioned earlier about trust. One of the biggest challenges that fintechs have got in any market is establishing trust with customers at scale and building that brand that can do that. And that's really expensive and really difficult to do. One of the interesting things about open banking is if you think of it not even as a competition, if you think of it as a secure, consistent way that fintechs can connect to banks and partner with banks, what we're starting to see in many markets now is banks operating as fintechs or using open banking to offer fintech services, either themselves by being a fintech or by partnering with fintechs. And then you've got a situation where the bank can leverage its brand. I mean, people don't like banks, but they trust them. Generalization, I know. But, you know, if the bank brand can be, you know, banks can use their brand in partnership with fintechs, all of a sudden I think it accelerates that building of that trust.
Can I add something?
Yes, please do. I mean, just before you say, I mean, I'm very happy that the panel is entirely interactive and everybody is bouncing off everybody else. And I should also say, from your point of view, we will have some questions. You know, you are invited to answer questions towards the end. So we will have a space for that. So please carry on, Anne.
Great, great. We talked, actually, we heard just before from the regulator about the sandboxes, and I know it's a topic that we wanted to cover in this panel. And I find that the trust topic can be very nicely developed if a company, a fintech, comes to the UK and actually tries the sandbox. Because once you try the sandbox, you're actually collaborating with the consumers, real consumers of the local market. Not only that, you're using data, synthetic data that has been provided by the regulator for you to do it. So it is really very great opportunity to build this trust. So when you go out in the market, you can tick the boxes at least that you have tested with your consumers, you understand the regulation, and you actually know what is the data you need to provide and adjust in your systems. So that is a great way to develop trust.
Cool, excellent. And I mean, I'm going to take a step back because we're going down the route of developing trust, we're developing products through the sandbox. But there is another alternative approach, and that is through partnerships. And I'm going to get Louise involved because, Louise, you have some very specific examples that you can talk about how you've worked with strategic partnerships that have played a key role in entering new markets. So please give us your insights.
Yeah, sure. I think that Brazil is going through a revolution of the way the financial systems and financial products are being delivered to the customers, especially for the fintechs, because we have evolved a lot of things on the last 4 years regarding some kind of technologies that I call as a service. Nowadays we have banking as a service, credit as a service, acquiring as a service, any kind of service as a service. It's obvious, but it can make a lot of change when you are facing what a fintech entrepreneur wants to solve, what's the problem that he wants to solve, and what does he want to invest to solve this problem. And with this kind of technology, which is really good for the regulator and for every kind of participant, we are allowed to let any fintech, doesn't matter the size, start offering financial products, opening accounts, doing PIX, charging bills, issuing cards, working as acquirer, doing any kind of service without having a license. You can choose a partner. This partner is regulated by the Central Bank of Brazil in a model that's being regulated at this moment, and it's what's created with Pinheiro Neto, José Luis, which is here. And the Central Bank is listening to them because only with this model, talking about my company, we have more than 600 fintechs ecosystems running under my lenses. So there are 600 fintechs that started faster than if they would like to get its own license in terms of time, in terms of money, and even in terms of hiring people that is specialists to work on this environment. Starting an operation in Brazil, it's not easy. Since the first day, you have a lot of reports to send to the government, a lot of fraud, a lot of people trying to fraud your system. Starting with Pix, Pix is a really good product, but starting with it is not simple. You have to know how to manage keys, a lot of response time controls that is regulated by the central bank. Even for open finance, if you are starting an operation, you must have all of these products just to be allowed to enter. So why waste time reaching your license, doing all of this, if you can do this in a white label way, using a company that already has all of these specialists and that can provide this for you since the first day. And these kind of companies, they are not aiming only to keep you on this model, but they are also helping you to grow. And if you want to have your own license, they are also prepared to help you with this, including with personnel of all of the kind of technology.
In some years ago, we were used to the term of build or buy when you have a new product to launch. Now we have the option to build, buy, or rent, like software as a service, bank as a service, credit as a service, as you said. And I could say some examples. We needed to build a bank from scratch, and we had just 5 months between the approval of the business plan and the launch with Pix. So we had a hard date to be met, and between or among the three options, of course, the most feasible one was to contract a service, a bank as a service, a software as a service, which was much faster, much safer in several aspects. And of course, this can be a phased approach. You can, of course, if you have this kind of partnership, you are going to divide your margins, right? But in a first moment, in terms of time to market, may be the best option, and you can have a phased approach. After some time, after you test all the business variables and you are successful, then you can stay up ahead, ask for your own license, develop your own products, your own technology, and so on, right? And the partnerships that we are saying here to help you develop and adapt to your products, it's not only on technology. It can be on operations, it can be on business partnerships as well. We have seen many cases, at least in Brazil, the market we know more, or in Latin America, of co-branded cards, for instance, partnerships in terms of acquiring, especially with open finance. Now we can separate very well the expertise of each of the companies to build the product. In the past, the banks did everything. They were sales channels, they had the customer base, the customer relationship, they had the products, the technology, operations, everything. They were running everything for all the business products and segments. Now you can do differently. If you are a telecom company, for instance, and you have a large customer base, and you are expert on knowing about the customer, having data about the customer that you can leverage in different products, or you have sales channels very well developed that you can use, you can establish partnerships with the fintechs or banks who are experts on products, on operations, on developing them, on keeping them, on offering them and innovating. And each of them is going to do a different role in a business model that is going to be a win-win situation.
Okay.
And
I want to actually, one of the examples we discussed about, for those Brazilians who are not used to the UK and have tried using Uber, I have to apologize. It is not the same level of service as you're used to in Brazil. And I have specifically, Luis, if you could give us some insights into what you've done that makes Uber works really well in Brazil, and I think that the service that you provided has really helped that service.
Sure. The case of Uber is really important, and it was made 4 years ago. So it's not a so actual thing. But with this kind of model, Uber, which has global company and has institutions along a lot of countries. It doesn't have a license in Brazil, but it have a really rich ecosystem of more than 1 million drivers that are, the most part, almost 9%, 90% of them are excluded of credit products in Brazil because they have some debts. Another thing is that to work in the way that they work it, they paid the drivers once a week. This is a real problem for those who are driving the streets, need to eat, need to refill their car, and need to do a lot of things. And with this kind of banking-as-a-service solution, we deliver an entire white label app operation without any developer, without any people being hired by Uber to work on this operation. And with this, 1 million drivers now have an account, and they receive the payment instantly. Not more once a week, but instantly. Instantly. Even with the payments that are made by cards. If you work by cards, you know that this payment will be available only on the next day. But with Uber, we did this instantly. And when you control all the amount that is being paid to the drivers, you can create some other credit products.
Cool.
Just you can give credit because you can retain the payments that we do to them. So now,
As collateral.
yeah, you are banking almost 9,100 of people that were excluded. And the interest of this operation is almost a payroll loan. Because a company like Uber, they want to include these people into this market, and they want them to have a really good experience, even in terms of interest rate. So this changed the life of a lot of people,
Angela.
And I love that you did that. In my last visit in Brazil, I had the pleasure to take a taxi. And when I said to them, I'm going to pay you with my card, he said, I only accept Pix. So it's thanks to you that this made it happen. And I must say, this type of technology is really amazing because, as you said, the unbanked, the individuals that never had the credit history to be able to open an account, they now can have an account. And in the panel discussion we had yesterday, I was fascinated to hear that about 20 million Brazilians are still unbanked. There is a big opportunity for the fintechs that we have here to also move to Brazil to learn and actually to also try to capture this opportunity of the unbanked. It is great that BICS, they offered an opening of tapping to those that never had a bank account. But hopefully as well, we'll have something like that in the UK if we have a digital ID.
I think financial inclusivity is something that really helps economies develop and is extremely important. But I'm going to bring us back to a point that you made earlier and also was made in the first panel, which was about trust. And the ability of the importance of how we can build trust in fintech. So, Chris, how has open banking contributed to the development of trust?
Well, I think, I touched on this a little bit before, but the concept of open banking is fundamentally the customer's in control, whether it's accessing their account to get data out or accessing their account to make a payment. There's a consent model where the customer is giving consent to a regulated party. And that's important. You know, the concept here is these fintechs are regulated, and as Marie described in the previous panel, if you have a proper trust framework, it means that means it's only those regulated fintechs who can technically access the bank, but then the second element is that consent, so they can only access the bank within the parameters of consent. So if a customer gives a fintech, for example, the consent to access just the last 3 months of data for just one account and a one-time access, then with a consent model and with a standard and a trust framework in place, that's technically all the fintech can access. Whereas before that, with sort of screen scraping and credential sharing, the way that you would access or give access to a fintech was effectively to give them your username and password, and the fintech could do anything with your data. And it wouldn't even need to be a regulated fintech. Anyone could pretend to be a fintech and access your account and do anything with your account. So I think open banking has put that strong security model, that trust framework, that consent model, and these rules, which we kind of pretty much designed in the UK, are pretty much the same rules that you've got in every open banking framework now around the world, in Brazil, Australia, which obviously is going more to wider open data, most markets in the Middle East, the US. So everyone's kind of adopting this same model, which is important.
Just adding to that, we are talking about adapting products and services to other markets associated to trust, not only the aspect of the data privacy, but also fraud and security, right? And these concerns are very important when fintech has the intention to adapt the products to the local markets. Market in Brazil, for instance, has a lot of frauds. Just to have an idea, according to some data that was published by Febraban recently, we had a 17% of increase of frauds in Pix in Brazil in the past 2 years, right? $2 billion of frauds just with Pix, instantaneous payments. What's happening in Brazil is that the guys are not just willing to steal your phone, your mobile phone. Now the intention is to steal or rob your phone and get it connected to your bank account, and then very quickly transfer your money to another account. And there is another problem, because as Jose said in the prior panels, the regulation created by Central Bank in 2013 that helped to create new banks with the payment institution also created a problem that's being managed by the market, the banks, and by the fintechs and the central bank, which is it became very easy to open a new account. In the past, you needed to go to a bank branch to open an account physically, right? Everything now is digital, just with your face, recognition of details of your documentation, etc. And not necessarily, although all the payment institutions are supervised by the regulator in Brazil, not necessarily all of them are with the best strategy in terms of anti-fraud systems, technology, methodology, processes. And what's happening in Brazil is that many accounts in names of other people are being opened to be used in this case of steals and robberies, right? So when you get into the market, if you want to build the trust with your customer, it's very important that you pay attention to these processes, anti-fraud processes, security matters, technology, and balance it between the controls and the user experience. Because some banks are very strong in terms of controls, but they penalize the experience of the customer, and then they lose customers as a consequence of that. And this is a very important difference between the market in Brazil, the level of frauds that we have there, and cybersecurity attacks, compared to the other developed markets.
Well, I've got another one for you, because we've got Chris is talking about open banking and the way that can standardize the approach, and we've got Luis, who always says banking as a service, standardized approach, we can adapt this approach. And yet you're talking about a localization down to cultural or specific market circumstances. So how can you reconcile those two and provide a cohesive new product or new service, Mauricio?
Well, I think this is one of the most important challenges, which is the localization. And I have had the experience of many years in a multinational bank, which tried to be international, but the lessons learned is that it's very different corporate banking and consumer banking in this aspect, right? If you're supporting multinational companies for corporate banking, basically you can leverage most aspects of the features of the products. Consumer bank is pretty different because of the regulations, because of customers' behaviors, experiences, differences in terms of competition in each of the markets. So the difficulty in this aspect is how you can leverage your footprint, your scale, and everything that you are building to be playing different countries with all the localization, all the things that you needed to adapt locally in terms of products especially. And what we have learned and seen the latest case of digital banks trying to be global or trying to operate in different countries and being more successful is that first of all, you need to use a lot of technology, right? Part of the success is because most of them are technology companies, not financial companies, right? Technology companies doing financial business. So use of technology in terms of APIs for integration, in terms of microservices, technologies, cloud services, technologies that you can have a better time to market and better features that are more granular to be adapted for each of the countries. This is very important, right? What we have seen in some banks is that they build the features for some specific country, already thinking about leveraging to the other countries. When they go to another country, they build some other specific features for that country, but thinking about doing the same and adapting for other countries. And every country they get in, they use all this expertise, all these features, all these microservices that they had developed before, which means that they have a better time to market and they are more cost efficient. So in terms of technology, I think this is very important. In terms of operations, which is another aspect of cost-driven situation of a business, and if you want to compete well, you need to be very cost efficient in operations as well, is to think about where you're going to locate your talents and your operations. Generally, the best approach is customer-facing or roles that need to understand very well the customer. And remember, it's not because you have a product here that you're going to implement and be successful in another country. First of all, you need to think about the problem of the customer you're going to solve. Who is the customer? What is the problem? Customer-driven, right? Data-driven. Understand the customer. And as it was said by Guy, not necessarily buy now, pay later is going to work in Brazil, right? Because it already exists there with all the installments on credit cards. So you need to think about the customer, and then you think how you're going to adapt your product to solve this problem of this customer. So thinking about that in terms of operations, it's better to have a team, a local team, focused on understanding the customer for roles, which is this very important, and roles that are more operational back office, then you centralize in shared services in places where you can have labor arbitrage, you can be cheaper, I would say.
And Angela?
Mauricio, you touched some very interesting topics, and I quite like the aspect you said about the customer, starting from the customer and reversing backwards what product you're going to actually create. Because if you are to create a product, or if you are to launch a product in another country and only focusing on the technology, and you go building this technology, and then forget this customer, the customer will end up with a product that they really don't care and they will never use. And we don't want that. Right? So I think also the other thing you said is never really think of what your product in your local market will be adaptable in another market. And an important thing is the local players, the local partners really help that. And another thing which I found very useful for organizations when they do these type of expansions of their products and services, I've done actually 4 product expansions globally for one of my previous organizations. And yes, regulation was one of the aspects that I looked at, but the way we approached this was actually not go to the most obvious countries to actually launch a product. It was actually to do 2 ways. One is actually to go to markets where you're going to get learnings, and 2, go to markets you're actually going to have a potential great success. And why do that? Because what Mauricio said, the learnings is what it will build up to create an even better product in the new markets you go.
Cool. I'm conscious of the time and the fact that I haven't yet given the opportunity for any of you to answer any or ask any questions. But are there some questions that you'd like to ask our panel? This moment in time. Okay. It's obviously, there is one at the front. And yeah. Microphone is coming.
Hello. Good morning. My name is Lisandro. I'd like to ask Luis and Simon, how important is the B2B market for you guys, and if you are focused on on providing solutions for this market also?
Luis?
Yeah, I think it's the number one in terms of importance, because the most part of B2B, they can use a lot of new technologies that are being developed, and that's not everyone that knows. For example, the Central Bank of Brazil is, I think, one of the most entrepreneurial that we have in Brazil. They created a payment method combining Pix and Open Finance that's called biometric Pix. With the solution, any e-commerce, any marketplace can use the same experience of buy with one click by Amazon. Any company can use this. This is provided by the government, and it is totally secure because all the consents, all the payments are there. The same thing when they are challenging a duopoly of Google Pay and Apple Pay. For example, with Pix by NFC, which is also a combination of Pix and Open Finance, you can make any app a digital wallet. You don't need to put your account into Google or into Apple. And you are challenged because, I don't know if some of you have cards issued, if you are issuer on Apple, but Apple takes a lot of charges, a lot of fees for putting them. And the central bank is dueling with Apple because of this, because Pix is made to be 100% free. So when we are aiming on this kind of solution, even that are for the final customers, we need to make the business, their business in this B2B business, to understand which are the possibilities that allows them to do all the solutions to the next level to reach their customers. So they work for me as a multiplier. So for this reason, I thought that sometimes they are most important than B2C.
I would add to that. I mean, B2B is far easier to enter a market than B2B. A B2C or B2B2C or peer-to-peer, a lot more complexity in terms of regulation, a lot more complexity in terms of user experience, and a lot more complexity in terms of data and data protections. So normally the first approach is B2B, and yeah, it's easier. Are there any other questions? I have another one. And that's to do with the first panel. In the first panel, we heard that the importance about liquidity. Now, could I ask you in this panel about how does the availability of capital affect or influence product strategy or speed to market? Luis, you're looking at me knowledgeably. Would you like to dive into that one?
I think that the funds that you have available, it really define not the way you enter with your product, but sometimes how much money we will spend to reach the same product.
Yeah.
We have a lot of alternatives.
Surely with a business or a banking as a service or a payments as a service offer, that's a far cheaper alternative than developing something.
Exactly. In Brazil, we have some customers from UK and from other countries. And the first thing when they are entering is to know if I can provide core solutions for them. And the first question I do to them is, which problem you want to solve? And the next one will be, why do you need your license? If you can do everything you need with some other partner's license. It doesn't need to be mine, but you have a lot of competitors that can offer for you all the services in a cheaper and faster way, so you can start the operation before investing more money. Just try this market. We have a lot to learn. Any country has a lot to teach, which are the methods that will work and which are not. So just try. And if after that, you can invest. I think that one of the strategies that Mauricio also has for Claro Pay.
Yes, and just adding to that, you said about liquidity, Simon. I would say that the market in Brazil, at least, has been very dynamic. I understand that UK is the same situation because of the regulation, but the competitiveness. And capital is essential in this case to achieve some windows of time to market that you may have. So for instance, many banks or fintechs didn't have enough capital to join Pix when Pix was launched, and that was a problem, right? Because you may be missing some customers or some business opportunities. Now we have several new features of Pix. If you are not investing in the automatic debit of Pix, you'll be out of the market because it's going to be very fast, right? If you are not investing to provide the NFC with the Pix for your customers, you are going to be out of the market. If you are not getting into open finance the same way. So you needed to pay attention to the windows of business opportunities you have in the market, and for that you needed to have a clear conversation with the investors to get enough capital, because they are really necessary, or you'll be out of business.
Great. Unfortunately, we're out of time. But what I would like to do is I've got loads more questions here. The opportunity, obviously, is for you to speak to our panelists afterwards and to ask your own questions. In the meantime, for me, I'd like to thank you all very much for your participation and giving up of your time and energy in order to be here. And also, of course, to the Brazilian Embassy, who have provided the facility, to all the staff here who have enabled this contribution to the UK FinTech Week, and also to the bilateral relationships between the UK and Brazil. So thank you all very much for your attendance as well.
Thank you. Thank you. Thank you very much, Simon, to all the panelists of Panel 4. Thank you once again to all the speakers and moderators. But to officially close today's forum, please allow me to welcome to the stage Katie Ramsey, Head of Fintech and the Department of Business and Trade. The DBT has been a very valuable partner of the Embassy to organize today's session. So I'd like to thank you again, Katie, in the name of the ambassador, as he was speaking of you this morning. And then right after Katie's remarks, we will go on to the networking lunch on the first floor. Thank you.
Hi, everyone, ladies and gentlemen. I know you're probably very keen to get lunch, so I won't speak for too long, but hopefully it's valuable nonetheless. Señoras y señores, hola, bom dia. As we draw to a close on this remarkable morning, it's my honour to deliver the closing remarks at the first Brazil-UK FinTech Forum. As you said, thank you very much. I'm Katie Ramsey, Head of FinTech at the Department for Business and Trade in His Majesty's government. And I'm absolutely delighted to have shared this significant event with you all today. And indeed, we've shared a lot of the week so far, and a number of you will be with us tomorrow too. And I must say, what an absolutely beautiful building. We don't work far away from this building. I've walked past it many a time, but I've never been in. It's my first experience here, and it's stunning. So thank you. Now, at the Department for Business and Trade, our mission is to support British firms in exporting, expanding overseas, and creating new partnerships and thriving in other markets. We also assist international firms in establishing their operations in the UK, fostering stronger global trade and investment relationships. And we've got a dedicated team working locally in Brazil and in many other markets worldwide to provide that tailored support, business intelligence, and connections to drive your businesses forwards. And if you're a British company looking to enter the Brazilian market, please do reach out to them if you haven't already. They're here today, Nicholas and Cristiano, and we'll be more than happy to help you. And my team in London lead on many initiatives. Rasheen from the team is here. Hugh, the boss, is here. Sat conveniently together over there. So we lead on many initiatives, and UK FinTech Week being one of the most significant ones and probably one of the most tiring. We can definitely attest to that. And we are extremely excited to be partnering with the Embassy of Brazil once again to promote events and activities during this crucial week for British financial innovation. And today has been a testament to the strength and potential of the partnership between the United Kingdom and Brazil. And we've explored numerous collaboration opportunities, we've shared invaluable insights, and you forged connections that will undoubtedly drive innovation and growth in the fintech sector between our two nations. And this occasion has obviously been incredibly significant, given that we celebrate 200 years of diplomatic relations between the UK and Brazil. And this bicentennial symbolises an era of partnership, of trade and innovation, which set the stage for our discussions on the dynamic and rapidly evolving world of fintech, which we've all heard in the panels so far. They've been incredibly valuable, offering us all a wealth of brilliant insights. And additionally, I'd like to share a few figures that emphasise the collaboration between our two countries. So last year, trade between the UK and Brazil reached its highest level in history, exceeding £10.4 billion, approximately 70 billion Brazilian reais. I don't know if I pronounced it correctly, Nicholas. We were practicing on WhatsApp before I stood up to say it, and it would have been a lot easier if I just asked before stepping up how to say it, rather than trying to do it in Word on WhatsApp. But so our trade exceeds £10.4 billion in goods and services, and that was a 17% increase compared to 2023, highlighting those strong economic ties between our countries and sets the stage perfectly for deeper collaboration between our nations in various sectors, including, obviously, fintech. And the UK, as we've heard throughout the week, and we've certainly championed it, holds a leadership position in fintech investment, ranking second globally and first in Europe. And we attract more capital than any other country except the US, with the UK raising £2.6 billion from 576 deals, accounting for 44% of the region's total, and surpassing the combined capital of the next 5 European countries, so the next 5 European countries combined. And meanwhile, Brazil leads Latin America in the number of fintech companies, representing a region that has grown exponentially since 2017. In LATAM, digital payments surged from £69 billion in 2017 to £156 billion in 2021, so nearly doubling, and more than doubling. There we go, my quick maths just then failed me. More than doubling. More recent figures show that Brazil's fintech credit asset base totaled 25.2 billion Brazilian reais, approximately 3.6 billion pounds in June of last year, and that was nearly a 50% increase from 2023. So the growth is incredible. And reflecting on our mutual discussions today and across the week, it's clear that both the UK and Brazil are at the forefront of fintech innovation, with the UK's robust regulatory environment and thriving venture capital landscape. They complement Brazil's dynamic ecosystem, your pioneering initiatives, which we heard a lot about, like PIX and Open Finance, and together we're incredibly well positioned to lead the global fintech revolution. So that covers the sector, but I think it's so important is the relationships between us, and that's what makes things happen and can ensure deals are catalysed and that those relationships push those forward. So I really want to extend my gratitude, the team's gratitude, everyone who's part of the delegation and here today as gratitude to the Embassy of Brazil and to Ambassador Antonio Patriota for hosting us. So thank you, Ambassador, and to your fantastic team, Iraklis and colleagues. Where is Iraklis? There you are. And also to all the panellists and participants, an event like today, as we know from Monday, it just cannot be a success without incredible engagement, organisation, insightful contributions. And so that's what has made this morning an incredible success. And I look forward to catching up with so many of you over lunch. And I know that the connections that are made will ensure that we have brilliant collaborations in the future. So thanks again for being part of the event. And let's enjoy some good networking and conversation over lunch. And obrigado. Thank you. Thanks.
Thank you very much, everyone. Again, thank you to the embassy staff, to DBT, to all of the moderators and panelists, and especially to the Trade Investment Bureau, Iraklis, who thought about the initiative since the beginning. It will be a pleasure to host you for lunch at the first floor, and wish you a good rest of the day. Thank you very much.